Hey everybody, welcome back to our weekly podcast. We had some really bad audio problems with the last one, so we've decided to re-record it. My name is Patrick Tan, General Counsel for ChatArgos. With me is our CEO and Chief Data Scientist, Jonathan Reiter. And thank you for taking the time out of your schedules to listen to us.
Second time, yeah.
Again, but I mean, it was good enough, it was important enough that we had to re-record it because a lot of you guys were asking what happened to the video. The audio was really bad. We didn't want to put out something that's not production. Well, this is not exactly production quality, but it is what it is. And we wanted to cover the trifecta once again. And obviously, from the time we recorded that to today, there's been quite a lot of stuff that's been going on as well. So we'll address some of those things, interesting stuff. So trifecta, we're going to talk about Binance. We're going to talk about Coinbase, and we're going to talk about DCG, which is really bonus material, bonus content material. If you want to stay tuned all the way right to the end, it's going to be a long one, so buckle up. Let's just dive straight in. Now, Binance. Let's talk about Binance. A lot of stuff, even though we covered a bit of this stuff in the last one, we want to go through it again. What exactly is going on? What's the end state? What's likely to happen?
So I believe it's now a week and a half ago.
Yeah.
2 weeks ago.
About, 10 days, 11
days, whatever. So Binance was charged with a wide range of civil violations in the U.S., securities-related stuff, and just a commingling of assets. So, and this will come up again, Coinbase in a bit. Generically, the regulators are going after these platforms for being unregistered securities trading platforms, being unregistered clearing agents for trading platforms for securities, and for being unregistered custodians. So those three things are kind of glued together. Those are all functions that are required to run something that looks like a custodial exchange, a centralized exchange, and they are generally not the same party in traditional finance. Some of the allegations, particularly with respect to Coinbase, to Binance, relate to conflicts of interest and misappropriation of assets that are the reason traditional finance doesn't do these with the same group. The Coinbase stuff is a little bit milder in that sense. And we've had a tiny bit of update since this stuff was filed, and we talked about it last time on the Binance front, in that there are not a tremendous number of fantastic substantive defenses coming out as the sort of discussion pushes forward. So the first and simplest set of charges is that they're operating unregistered securities exchanges, securities trading platforms. This hinges, of course, on the stuff they're trading being securities. And there's a bunch of discussions about that. We can come back to that one in a minute. There's some news in the filings as well on that front. But yeah, the extent to which those things are securities, there's not really much of a defense on that part, nor is it necessarily that exciting. I mean, it's the same problem we've known about. And at the same time, if those things are in fact securities and under U.S. whatever law, then the fact that they're running a clearer and a custodian for those things without licenses is also kind of hard to defend. The stuff that's interesting are the allegations around interesting people having control over whatever bank accounts that they weren't supposed to, and how independent U.S. onshore Binance is from offshore Binance, and how much of the money was, traded from place to place, and whether affiliated market-making firms were trading tremendously on the platforms. Spoiler alert, they were. No one really seems to even dispute a lot of that. I guess I would summarize a lot of the response to the charges at the beginning being, we are doing these things, but they're legal because these aren't securities and there's a blockchain. And that's just a non-serious response on the Binance part for the most part. It's different in its lack of seriousness than the Coinbase response.
Yeah.
But really, like the allegation that you have an affiliated market maker that's trading on this thing without any of the requisite disclosures or honesty or whatever, transparency around who owns what. And the answer is, yeah, we're doing that, but, trust me, bro, it's just crazy. And then if you want to talk a little bit, there's some very concrete allegations of egregious compliance violations, sanction stuff, and, just crazy. If you've got North Koreans on the platform, you know about it, stuff like that. You got problems.
By their own admission, not their own admission, but at least by the SEC,
there's transcripts, there's quotes.
Yeah.
We in general, we assume that if a court filing in pretty much any country includes what look like transcripts of recordings or screenshots of chats,
they're not
fake.
Yeah, they're not fake.
Yeah.
That's right.
Yeah.
So what we know is that they had something like 65 million users or something like that, for which they KYC 24 million allegedly. So I guess they tried, so.
40% compliant is 100% not compliant. Yeah.
Okay, but I guess the point I want to make is that, and this is relevant now as we're re-recording this podcast, and is that the irony is like they want to say that BAM trading and all that is a separate entity. They just came out recently, like just hours before we filmed this, to say that BAM trading has no ability to sign any contract.
Okay, so let's sort of step back and clarify here for a second.
All right.
So Binance has a U.S. operation, which is Binance.us, BAM Trading, BAM Services, whatever the U.S. companies do this, and a collection of executives that run that.
Yes.
Famously, Catherine Coley was in charge of that for a while.
Yes.
Not that long a while, quite a few years ago, and then she disappeared. We now know that she's been cooperating with the government extensively, again, because there's, log documents and transcripts and whatever, quotes and information that very clearly directly came from her. And one of the sort of key claims here is that entire operation was a sham, right? So it looked like it was a U.S. operation with a bunch of identifiable U.S. executives, financial services experienced people, but that in fact the whole thing was just a front and was run entirely by Binance offshore. Mike Burgersberg, Dirty Bubble Media had found quite a while ago pretty convincing evidence that funds on Binance US were just spirited away straight to the offshore operation, and that withdrawals required transfers out of the offshore operation. So there's kind of on-chain evidence that's in some sense true. Look, the documents include lists of who were the signatory for various bank accounts.
Yep.
And one of the easiest ways you can tell if a subsidiary is run independently or not is whether executives from the parent company can sign for payments for the local company. And if they can, or if they personally beneficially own the local entities, they're not independent by
no stretch of the imagination. Yeah. The other thing I think we can look at is that, so if you've not read the original SEC suit, it's 136 pages. It's a good read. But towards the end, and this is the part that I know there's a lot of people skimmed over, though you should really pay attention to it, is that tucked into that is a whole list of tokens, which now the SEC alleges are securities. And interestingly enough, the SEC names the parties involved in those tokens as well.
Names the individuals, the founder, the chief developer,
the CTO, whatever. Yeah. Historically, they only name names, when they intend to.
Yeah, so it's a long-standing tenet in the U.S. That you don't name people you don't intend to charge, because then you're just sort of slandering them or whatever, insulting them, criticizing without any opportunity to defend themselves. If you charge them, then they can defend themselves, and you shouldn't name people you don't intend to charge. Interpret that how you will. It suggests that they're likely to bring some charges against those folks.
That this is gonna keep going. I mean, okay, we'll get to that in a bit, because there's a whole bunch of stuff that's happening in Congress as well with people trying to get against the can and stuff like that. That's a whole separate discussion. But looking at the whole long list of tokens which the SEC is alleging that they are securities, regardless of how you feel about how you test and whether or not it satisfies it, and that's aside. But I think perhaps more importantly is to understand that they only need to be nailed for one. They don't. That's the benefit of. I don't know benefit, but they don't necessarily have to prove all of these tokens were securities.
Well, yeah, okay. So I guess this is maybe a good way to start transitioning towards the Coinbase discussion. So this applies equally to Binance and to Coinbase. Yeah. They need to have 100% compliance with the rules, or they're in violation of the rules, whereas the government only needs to find, a handful of exceptions. Now, I will say, in the case of Binance, there's a lot more stuff related to sanctioned stuff and generic sort of money laundering adjacent stuff, and less leaning directly on the securities parts. Similarly, Binance has said more about how its U.S. operation is separate from its offshore operation. Coinbase has an offshore operation.
Yes.
Coinbase has leaned a lot more on how their process for identifying what is a security is flawless, and therefore they couldn't possibly be listing any securities. So it is interesting to see, Binance has sort of suggested they have a flawless KYC onboarding compliance process when manifestly they do not. Having one North Korean or Venezuelan government official sneak through your process is worse than having one security sneak through your process, right? But Coinbase has leaned very, very heavily on our procedures for vetting this are perfect. And just statistically speaking, if you look at 1,000 tokens or 1,000 onboarding customers, right, and you reject, say, 80% of them, still a reasonable chance you got one or two that slip through the net. I don't even think that's terrible. I mean, banks get fined for this all the time. Mistakes are made, but when you keep screaming on television that you could never possibly make a mistake, Good luck. Yeah.
Well, okay, so going back to Binance TLDR, what happens next? Now, there are some interesting transactions, or maybe not. Well, the TUSD thing is going to be a bit of a problem, right? Wouldn't you say? Simply because what we've seen of late in the last 24, 48 hours is that there has been some suggestion that it's no longer possible to redeem TUSD.
It's at least it's having difficulty. Right?
Or it's having
TUSD
difficulty.
also had some stuff move offshore. People haven't been terribly transparent about a lot of this. And I will say, in all of these cases, in the Binance case, some of these transcripts are people that are identified very clearly, and the government will be able to go ask them for information. Similarly, some of the TUSD stuff, whether the offshore part is as accessible as the onshore part, but the people associated with these projects that are named in the settlement, in the charges, quoted in the transcripts, and sit in the United States, and have possibly already been contacted by the government, you'd think they might provide some information. How much of the Binance, of the offshore dudes, are actually here versus in the U.S.? I don't even know.
Yeah, we don't know.
We don't even know.
There's just no way of knowing.
I mean, there's a handful of Singaporeans. We don't know
Yes.
if they're actually in Singapore.
We don't know. Yeah, correct. So, I mean, there seem to be quite a few Singaporeans floating through all this. I mean, there's Alvin Bro, there's Samuel.
Alvin Bro is one of the top 10 names here, I think.
So the funny thing, well, the thing is that with the TUSD stuff, we know that, or at least we believe. Well, no. Okay, it was stated in the attestations. At least $1 billion came out from Signature during the Signature Bank, Silicon Valley Bank failure weekend. So we know that we tracked this, we tweeted about it, it's out there. About just slightly shy of $1 billion came out and went to Capital Union. If you look at what TUSD's market cap in general has been, that ought to have been backed. But there's been a lot of TUSD minting of late, especially when Binance used it as a major trading pair. Once the BUSD stablecoin was sort of like went off the rails.
Yeah.
So.
Okay, so why is this important, right? This is important because these projects seem affiliated with each other. And if you read the Binance charges in particular, it feels very much like criminal stuff is coming. And that sometimes they don't announce the criminal charges until they've finished getting all the information they need, the warrants, and filing everything. The idea that some of this money, I mean, they're listing bank accounts with, the old XXXXX and the last 4 digits and the signatories. That suggests they have a lot of information about where this money is all over the world.
Yeah.
And attempts to seize stuff, freeze stuff, ask people for information, whatever. Banks tend to comply with U.S. government requests for things because otherwise their dollar clearing gets cut off and they're no longer banks.
Yeah.
You'd think that's proceeding now. I would assume there's a reasonable chance anything that sort of wobbles or goes offline for a while is because of that. Just because it's out there, right? There's a guy with an axe going after.
So, okay, let's wrap up with the Binance stuff, TLDR. What happens? Like, what are the possible outcomes? What are the scenarios?
So Binance is starting to defend themselves. The defenses don't seem fantastic. As you alluded to earlier, one of their defenses is that they don't control the onshore entities, and yet the onshore entities are not able to enter into contracts without their consent. Maybe that's just because these people are hurrying out these defenses and something more rational will come out in the future.
Binance exists in a quantum state.
In a quantum state, yes. Your dollars are both real and not real. They're both yours and not yours. What is the old, please select all Binance Smart Chain validators, and it's just CZ wearing all the different hoodies? Look, fair enough. We'll find out. There's definitely more to come on that one. The Coinbase story may or may not be finished from a legal perspective relatively soon. Yeah. In the case of Binance, the U.S. is asking for injunctions that would essentially terminate at least the onshore portion of the business.
Yeah.
We don't know if those injunctions would also terminate the offshore portion of the business, because if they're able to just crush Binance's ability to get or use dollars at all, or if they can, for example, OFAC them in a way that would mean Amazon and Google won't deal with them on their cloud platforms anymore, they're done. Right?
So basically what we're saying is that there's a non-zero chance that if you go down to the website in the coming days, weeks, months, instead of the website, what you'll see is that this website has been seized by the U.S. Department of Justice.
Look, I don't think that's an extremely high possibility in the near term, and it certainly seems like they're strangling things more from the back end than they are from the front end. So the famous poker platform being shut down over a decade ago now. Everybody woke up one morning and all the websites had been seized and they were gone. This seems like a much deeper, longer, broader, bigger effort where there's going to be stuff clawed out in the back and things are going to start to be difficult. This began with the bank seizures in the U.S. That was maybe the beginning of the end, perhaps the end of the beginning. And now we may be getting closer and closer, but it doesn't seem like a single coordinated action, everything disappears at once because, this stuff's being filed incrementally. They filed the Bittrex stuff,
Yep.
Binance and Coinbase, and sort of working their way down the list here. The criminal charges are presumably still pending for at least some of these characters. And as you alluded to, and this is a great segue into Coinbase, where there's more details about some of the securities details of some of these tokens. Those project founders have been named, quite a few of whom are in North America, and likely would provide information on their, in the SEC's words, co-conspirators in some of these securities fraud actions. So Coinbase is and the next one up here, that's a fascinating situation.
So Coinbase is interesting because although, okay, let's say now the business get terminated, right? And we talked about this in before the re-recording.
So when you say terminated, so if Coinbase is found
to have been guilty of breaches of
really at this point, any unregistered securities trading, that's probably the end of their onshore business, only because they've pushed back so hard for so long. I mean, you can tell the government, we screwed up, we did whatever, you pay a fine, and that finance is full of mistakes, you apologize for, move on. But you can't do this.
So I think in this case, you can't do that. But it's not as if that the company itself has no value, right? Because we know for a fact, and we can calculate this with a reasonably high degree of precision, based on how much they share the treasury yields with the US, with Circle on the USDC part. So is there an outcome where Coinbase shares drop to some ridiculously low amount? Somebody picks them up pennies and dollars such that, you can auction off the bits that still matter. Or is it that there is no redemption path for this company?
Redemption, pun intended. So I think they have a partnership with Circle, and to the extent to which you believe some version of USDC is a long-term survivable product that will have money in it, earn interest, whatever, generate earnings, fine. It remains unclear if a lot of the BUSD type arrangements that were alleged to be securities type arrangements, because they were paying people rewards for using the token, if that kind of stuff is alleged with USDC as well, then probably the entire thing gets ripped down. To me, it doesn't seem like you're going to be in a situation where one of these entities survives and the others disappear. Right? And they've gone after Paxos to some extent. Maybe the answer will be we stop there, Circle pays a fine, and then Coinbase disappears from a securities whatever operation. It's possible, but it's starting to feel like this stuff either all gets pushed offshore or things get heavily rebooted. Maybe there's a little bit of a prisoner's dilemma situation. Maybe one of these guys rats on the other, and Circle, to save itself, decides it's going to, concede that these are securities, or Paxos, whatever. Somebody will do that just to be able to survive. The government, you'd think, is trying to get one of these people to sort of admit to all their charges. The strategy so far has been to roll your way up from the bottom to the top, or more senior folks. If they can get a top-level player, and I think we can agree that Binance, Coinbase, Circle, and Paxos all qualify as top-level players. Bittrex is an old, large exchange, but not that. They can get one of those guys to concede this stuff, then they'll just nail the rest of them to the wall.
Well, I mean, okay, what do you think about some of that discussion right now with stuff happening in Congress? With there's this, I don't know if it's just saber rattling or stuff like that, but the attempt to get Gensler fired.
I mean, so this is not, so we focus on on-chain data and this kind of stuff and transparency. Obviously, no people from traditional finance. Look, the largest lobbying, I mean, maybe Lockheed, whatever, but like the largest source of lobbying stuff in most of the world is the financial services industry. And an awful lot of people in financial services would like to see these rules enforced somewhat evenly. And if you really want to challenge the large U.S. banks to deploy lobbying efforts in Washington to change management at a regulator, good luck. It doesn't seem likely that that's going to work. People should advocate for what they believe in. You can raise money for, whatever the rules are for fundraising in the U.S., follow all of that, of course. But, I mean, FTX didn't, clearly, right? They're all being charged with all kinds of weird election stuff. But it seems difficult that you're going to win a total reversal and a massive capitulation like that at this point, particularly given kind of overall what the political situation is.
I think this is a bit of a sideshow, to be honest. Like, trying to get Gensler, I mean, making it personal seems just immature.
I mean, most likely already the Department of Justice is well along in a criminal whatever thing. So the SEC commissioners, the chairman, whatever, the chairperson, are political appointees, and they are somewhat actively overseen by Congress. So in some sense, if the voters elect the House of Representatives and the Senate, whatever, that would like the SEC to behave differently, it is not ridiculous for them to tell the SEC that. The SEC would tell you that their enforcement and their efforts that are more like prosecutions are reasonably independent, but they're a political organization and it is accepted that they take political feedback. And, you know, if a congressman calls and says, don't charge this guy, that's a disastrous, catastrophic scandal. But if they overall provide feedback that we'd like you to focus more in this area, that area, whatever, no one has a real problem with that.
But that's different. That's different from what this is. And, exactly.
Yeah, and to the extent to which they've handed information to the Justice Department, that don't work that way at all.
Yeah.
So if there is criminal investigation, prosecution, charges, whatever that are in progress, that does not respond in the United States to political process.
Correct.
And it's a horrifically disastrous scandal when any politician tries to get involved in that space.
And that's the whole point. I mean, like, those guys you see on Twitter who are going on and on about how, you know, get rid of Gensler. It's not a silver bullet. He's not Voldemort.
No, it's probably...
He's not Darth Vader. He's not Voldemort.
It's almost certainly far too late for that to make any difference.
It's not going to make a difference. It doesn't matter who takes over.
If Binance is going to be charged criminally, if any of these folks are going to be charged criminally...
Possibly when?
Almost certainly those processes are far enough along that the political system has no ability to stop them.
Yeah.
So maybe, you know, the Senate confirmation hearings for an attorney general, they could get someone to concede that they were going to emphasize or de-emphasize certain areas for investigation and prosecution.
Yeah,
but once a U.S. attorney has decided to investigate and go after somebody, there's essentially no way to stop that without probably getting yourself kicked out of the Senate. I mean, the history of politicians touching that is terrible. I mean, Trump tried to get involved in a fair amount of this, and it was an ongoing problem for him for a very long time. He's got lots of problems that are unrelated to the rest of this crap. Yes, it's probably too late anyway, and I would expect that deploying your lobbying dollars against the major U.S. banks to remove the guy that isn't even your problem is maybe not the best way to do this. Deploying them towards getting people elected that agree with what you agree with, yeah, fair enough. I mean, that's not crazy. There's an election cycle coming up, so it's going to be fascinating to watch that. I think a lot of crypto people think the general public cares more than they do. And this isn't to say the issues are unimportant, important, whatever. A lot of things the general public cares about, I couldn't care less about. Right? I don't read People magazine. But I think if people don't understand that, they may discover that a lot of their messaging doesn't land well.
Yeah. Okay, so let's go back to Coinbase before we move on to DCG, which is that bonus content that you're looking for. Now, Coinbase, what happens next? Because we know that they're kind of reached an impasse. Now, them moving offshore...
It's not just an impasse. So normally there's a charge, there's a negotiation, whatever. Coinbase and the SEC have been yelling at each other for so long that it's hard to see there being a negotiation.
Yeah.
There'll be legal maneuvering back and forth, but if they can get injunctions to shut the stuff down...
That's it.
You can't turn an exchange back on. I mean, the thing that's relatively unique about financial services businesses is that once someone presses the pause button, it's the power button. It just doesn't... I mean, how many projects, stablecoins, exchanges that paused withdrawals ever turned them back on that, you know, when it wasn't under court supervision? That's not how financial services works. When your card stops working, you go find a new provider. Right?
Yeah.
People just don't...
So there's no... I mean, is there a possibility that Coinbase becomes an offshore entity? I mean, because some people are alluding, oh, you know what, they can go offshore and stuff like that. I just don't see how that would happen, especially considering it's a listed entity.
Well, okay, so the charges, well, look, the U.S. lists companies that don't have any substantive U.S. operations.
Yeah, I know.
I don't know of anybody that's retreated from the U.S.
That's what I'm saying.
Listing.
Yeah.
People allocate resources over time. I mean, Binance seems more likely to have criminal charges filed than Coinbase, given reading the stuff.
Yeah.
So it seems very difficult for Binance to retreat offshore in its current guise and maintain access to much banking in the world. Coinbase could. Coinbase and Gemini are setting up these offshore operations, derivatives, whatever. Okay. I mean, if Coinbase pays a fine even if they admit some version of civil wrongdoing and agree to stop doing stuff in the U.S. and launch an offshore platform, and they can maintain their relationship with Circle for dollar on-ramp and whatnot. That's a version of the business. I don't think that's as large an exchange as it was, but, okay, they can try. That, to me, seems like something where we can have a conversation, whereas Binance seems like there's almost certainly information that's going to come out that's like, you remember the Bits Lotto stuff? Where they said, well, we know that they're Russians evading sanctions. We have to find a way to get them on the platform. And, as soon as this is published, the business will not survive long term. Nothing that's that ridiculous has come out of Binance yet. And, Coinbase's strategy of telling the government that they're wrong and Coinbase's behavior is always perfect is not what Binance has done. Right? Maybe Binance is prepared to concede some ground and maybe find a negotiated solution to this. If Binance wanted to do that and flip on some other people, I can assure you the U.S. government would be perfectly happy to have that conversation. Oh, yeah, I see what you mean. So, I think they actually have more cards to play than Coinbase, just because Brian Armstrong's attitude has been so convinced they've not done anything wrong. Yeah. There's no room to retreat. Binance has plenty of room to retreat. I mean, when's the last time CZ debated a government official on live television?
Yeah,
never. Right, never. So, okay.
Okay, so maybe. Yeah.
I mean, it doesn't seem likely to end well for them. But I think they actually have more ground to give. If their self-preservation instincts are kicking in, they have a lot more maneuvering space, I think.
No, but the other option, of course, is that they pull a run-up.
Yeah, I mean, that's probably impossible in the case of Coinbase. It's hard to imagine.
Yeah, so I don't think
the website just disappearing. Whereas, so Binance, I guess, is a much broader distribution of outcomes. One of them is they decide that the business and the revenue stream is worth it to them more than the principles of whatever and just concede a bunch of things to find a way through. The other one is that they just disappear. Coinbase is a much narrower set of outcomes. I think Coinbase's narrow set of outcomes doesn't ever end anywhere on the positive side.
Well, how does the Binance guys pulling another end on the positive side?
Binance turns in all of their competitors and ends up with 99.9% market share. I mean, I don't know. It's what it is, right? They partner with Circle. If Binance finds a way to settle, they can partner with Circle tomorrow.
That's assuming there's no DOJ.
I'm just saying.
Yeah. All right. Okay. Fine. Finally, DCG. This is something that nobody really is paying attention to because there's so much. Yeah. There's such a big dumpster fire out the front that nobody's looking at the dumpster fire out the back.
Yeah. So DCG is a fascinating situation. It's a big conglomerate. So the interesting thing here is that the digital currency group, such as it is, consists of Grayscale, which collects massive fees from running a collection of crypto trusts, and then a large number of other businesses that, in cash flow terms, don't really matter, relatively speaking. And I think everyone acknowledges this for years. Whatever. Grayscale throws off 9 figures of cash every year. It depends a bit on exactly where Bitcoin prices are, or whatever the rest of it, but, they have huge trusts full of ETH in Bitcoin that they collect. I think it's 2% of the Bitcoin. They collect 2.5% of some of the smaller trusts. Yeah. And that money's been going somewhere for a while, right? That money has not been going into, any kind of depositors' pockets. So Genesis, their trading operation that was huge and blew up following Luna, Free Arrows, whatever sequence of collapses throughout 2022, that has $750 million to $900 million, whatever, dollars of Gemini earns money. That's all kinds of retail depositors. That's all in bankruptcy now. Yeah. Right? Genesis, their borrowing, lending subsidiaries, whatever. And, we have a lot of interesting details around the finances of the conglomerate from the bankruptcy filings of their trading operation. And something that we published, I think it's now a week and a half ago.
A week and a half.
2 weeks ago now. Yeah. Is that it looks as though they had a lifestyle and wealth management subsidiary that was a registered financial advisor in the U.S. So I'm going to refer to this as a broker-dealer, securities trading, financial advisor, registered investment advisor. The differences here don't really matter. They're a licensed thing that managed some money, and they had to file some forms with the government. And it looks like they did a couple of things. So they had one high net worth customer that had around $3.6 billion of AUM with them, and substantially no other customers. One would imagine that customer is the CEO of Digital Currency Group, because who else would put their $3.6 billion with a single client broker, investment advisor, whatever. And that thing had about $1 billion deposited in Genesis through a cash management fund, whatever vehicle. Again, U.S. registered fund. And they pulled that money right around the same time DCG bailed out Genesis with a promissory note. So it kind of looks like their founder and CEO pulled a bunch of his personal money and substituted it with a corporate promise right before all the dominoes began to fall over and they ended up in insolvency. I realize that Gemini Earn isn't the only creditor of Genesis, but in some very basic sense, the answer to where their money is in a company called HQ Cash Management Fund LP that contains at least whatever $1 billion per the bankruptcy filings. It's been amazing to me that
there's also the Founders Liquidity.
Yeah, so okay, they have a couple of other funds. One of them is called HQ Founders Liquidity Fund.
These names are
easy to figure out where that came from. And we know again from these public filings that they had some securities, borrowing and lending, whatever, pledging arrangements with Silicon Valley Bank. So maybe there was some Founders Liquidity being borrowed out of Silicon Valley Bank. Maybe, I mean, government filings kind of tell us that's the case. Yeah, so it does seem as though shareholders of DCG were financing a investment advisor to manage the founder's money, and that money was pulled right before, coincident with, some intergroup borrowing and lending arrangements that subsequently blew up badly with a lot of retail losses. That's unlikely to end particularly well for anyone involved. Yeah, interesting stuff. The Digital Currency Group is the group that keeps on giving.
So what are the outcomes for the DCG side? I mean, like, could somebody come along? Oh, okay, ETF, I think, is highly speculative, and I don't think it's going to happen.
Well, it's interesting. Okay, so we can talk about that for a second. So there was a panel at Bitcoin Miami, was the last time we referenced a Bitcoin conference panel, where there were a number of people discussing the DCG situation, and Sasha, the founder or managing director or head, whatever, of Furtree, was talking about their efforts to get more information out of DCG, sort of related to GBTC and I guess ETH East, the two big DCG run, Grayscale run investment trusts that have a tremendous amount of Bitcoin and Ethereum. Instead of just getting these converted to an ETF, the SEC, which seems impossible, if you could somehow agitate control away from people who are currently running it, redeem the trust, unwind the trust, or something like that, there's a bunch of value to be released there, somehow. Right?
Yeah.
Fine. Exactly what strategy, not important for this conversation. So there's people trying to agitate to do that. If you manage to get that trust in some kind of redemption situation, there's no more cash in DCG.
Yeah.
At the moment, all the money that's left is wherever the dividends went from the earnings from Grayscale.
Yeah.
So if they can get their hands on that or not, whoever they were paid to, if that disappears, then that'll be all of the money. It's not even an ongoing business of any value. So you have a weird tension where there's a lot of people that want to fix GBTC by unwinding it, dump the assets in a much lower fee product. It's the most expensive by far to run now.
Yeah.
But then the creditors who need Grayscale to stay around charging exorbitant fees to pay them back.
Yep.
I mean, if we ignore clawing back money that the founder of DCG, Barry Silbert, may or may not have taken out personally, the only way these Genesis depositors are ever getting their money is if they either sell Grayscale or collect Grayscale's fees. Because there ain't no other source of cash here.
Which is why I think that the legal strategy that they seem to be taking is one of just stalling. Just taking as much time as possible. Because the more you kick the can down the road, the more fees you can collect, the more this becomes a little me kind of problem. I
mean, I suppose. At the current fee schedule, they would need to hold this off for so many years. If they're able to cut a check and make the creditors whole, the court will just dismiss the case.
Yes.
Because you don't get to complain. I mean, at some point they could argue about being paid post-interest, whatever, but it's fine. Yeah, I just don't understand why they think that's a realistic strategy. Unless it's the old Suzu theory that the prices are only going to go up, so Bitcoin will be on the moon and they can just sell their fees and it'll all be fine at that point. I mean, they still own a bunch of shares of GBTC, right? They could sell that, maybe. I don't know. Nah, it seems unlikely there's a resolution in that department.
So there you go. Binance we kind of expect, or I think there's a high likelihood of a DOJ kind of outcome. So what that means for the exchange, or what that means for people who continue to trade on the exchange, you should be able to figure out for yourself. Coinbase is a bit more tricky. If you still have assets on Coinbase, when they are, if they are ordered to close, that doesn't mean that the money is gone. I think there'll be an orderly withdrawal process.
I think that as well, but I would point out that the registrations that they're being charged with missing are precisely the things that provide segregation of assets and protection for investors.
Yeah.
So if you have a broker-dealer license and you're doing securities with a custodian, there are procedures. You have to pay fees for insurance, for example, to the Securities Investor Protection Corporation, whatever. And then all those assets are properly walled off.
Yeah.
If Coinbase has a very large fine, it is completely possible.
Oh, that's true.
And we can touch on Bitrex in a second. It's completely possible that customers only get 90% of the money back.
They apply customers' assets to pay out the fine because if you look at the terms and conditions of use, I completely forgot about that, but if you read their terms and conditions of use, the terms of use, it doesn't say that the customer's assets actually belong to the customers. That's right. It actually says that it belongs to them.
It doesn't matter what the assets say. There's a fine, right? They got to pay the government. Generally speaking, fines and taxes are above normal creditors. And if you're a depositor on anything, you're below fines and taxes. Such is life in essentially every jurisdiction.
Correct. So there's a possibility you take a haircut.
This came up in the case of Bitrex. So Bitrex filed for bankruptcy. And their biggest liabilities are to the government for fines. And a lot of customers are unhappy that their money is going to be applied to paying the fines instead of redeeming them. And, I would just point out that if you have stuff under a securities and custody regime, you have to pay certain fees to get that protection. That raises the cost of running the exchange. So that either means the exchange operators make less money or the users of the exchange pay higher fees.
Correct.
So either users were benefiting from low fees, the exchange was benefiting from higher profits, or a bit of each. And in exchange for that benefit, you lose this protection. It costs, I don't remember, 20 basis points of net revenues or something to be a member of the Securities Investor Protection Corp, which is the thing that ensures your security holdings are okay, even if the broker goes bankrupt. You're not entitled to that protection if you didn't pay for it. And, generally speaking, platforms charge their users for their running costs. So you got lower fees, and this lack of protection is
the price that you have to pay for getting lower fees. Oh, no, that makes absolute sense. So, and then finally, the DCG thing, I feel at least, and this is just based on what I've seen, is that there is the potential for somebody to come in, clean house, hive it off, clean it up, break it up, try to extract some kind of value that remains.
So there's two things there. So there's the stuff with respect to Grayscale, and then there are claims by the creditors. So DCG is now defaulted on their subsidiary on a loan that they made to them. So there are claims that the people that are running Genesis as a creditor are still beholden to the DCG parent company and aren't really representing the interests of the creditors of Genesis. Generally speaking, management's accountable to the equity holders unless the company is insolvent, in which case management's accountable to the debt holders. That's how the Anglo-American, whatever system works. So there are attempts to remove those people or change the way the negotiations work so they're less involved. It is certainly possible that either the Grayscale stuff gets flipped over and the box is then empty, right? So there's no money. Or the company gets sold, people get redeemed. Similarly, the creditors can get Genesis management shifted. They'll put DCG in insolvency, right? And then, look, if Barry's secret plan was to run out the clock on the clawback period for the personal investments that were withdrawn, maybe he's already succeeded, because that stuff was almost a year ago now. If that works, I suppose everyone involved deserves what they got. I don't know. It's interesting.
And on that note, that's it for this week. Thank you for bearing with us. Thank you for watching again. I mean, we tried to fix the audio this time. And if there's any feedback, leave us some comments below. Otherwise, hit that like and subscribe button. We'll see you again probably towards the end of this week when we do another recording and bring you the latest updates from there. But otherwise, reach out to us through our social media and have a great rest of the week. Talk to you soon. Bye-bye.